Good morning, ladies and gentlemen. My name is Greg Michalowski from ForexLive.com. Today's date is October 25th, 2022, where I take a technical look at the major currency pairs, mainly versus the US dollar. So let's get started. Before I take a look at the major pairs specifically, I want to bring up this little table right here. This table shows the average trading ranges and the actual ranges of the major currency pairs versus the US dollar. And giving you an example, the euro versus US dollar has a current range of about 50 pips. The average trading range is 122 pips over the last 22 trading days. Why 22? Because that represents around a month of trading. If there's 4 or 5 weeks in a month, and you have 5 days in a week. You have around 4 weeks is 20 days. Add another 2 or 3 trading days for the end of the month. Then you get around 22 trading days. So that's why I use 22. Could use 23, but it's not going to make a huge difference. So what we see here is that the 50 pip trading range is well below the 122 pip trading range that the euro versus US dollar has had over the last 22 trading days. So there's room to roam. That's true in all these major currency pairs. As you can see, today's percentage of the range is much less, or is less than 50% of the average trading range. It's 41% for the euro, 30% for the pound, 46%, so on and so forth for these major currency pairs. So there's room to roam. If we if we were going to work our way toward the average trading range, which I wouldn't expect would happen here today, but we could potentially see 75 pip trading range, 80 pip, 90 pip trading range for the euro, and that would give you opportunities to make some money. So, if we take a look at if we have that idea, we can take a look at some of the major currency pairs and see if we have where targets might be for those currency pairs on breaks. If we take a look at the sterling versus US dollar, we're already making a break. We're trading at the new highs right here, so we are extending the trading range to the upside. What gives the pair the upward bias? Well, if we look at the chart through here, we did see support buyers against the 100 and 200 in trading yesterday. We saw support buyers against the 200-hour moving average in trading today. So we did see already the rotation to the upside here coming into the New York session. And in the last few minutes, we've seen a rotation to the upside, a break above the high, and moving into this yellow area. This yellow area represents swing lows and really swings highs through here, where the market high came in within this yellow area through here. And as you can see, there's a number of swing highs that came within this yellow area just over the last few weeks of trading, and that is a swing area that we need to get to and through. So we're entering into that swing area. Above that level, we have this trend line. If we break above that level, we're going to head to this other swing area on the top side, which goes back further as well. So we'll take that would be a target on the top side for further momentum in the sterling versus US dollar. So right now the buyers are making a play. They have been making a play since this point right here, where the market bounced off the 200 and 100-hour moving averages. You can see it more closely here with all those arrows. And now we're trading into the range right through here. If we get above the 113.83 and then get above the top side trend line, that would open up the door for further upside momentum for the pound versus US dollar. Now let's take a look at the euro versus US dollar. And this currency pair shows something a little bit different. In fact, we're lower on the day here for the euro versus US dollar. We're also below this swing area, which if you go back in time and take a look at this period through here, and then take a look at this period through here, this is where we've seen a number of different swing lows and swing highs through here. Yes, we had a extension above here, and we had extensions above here during those periods, and even in trading this week, we have had an extension above that swing area right through right here and right here. But both the highs, both yesterday and today, came in at the 98 level, just below the 99 level, nice natural resistance level. So if we were to follow the pound versus US dollar, what would we need to do? Well, we need to get above the 0.9877 level. That was the That's the high of this swing area through here. And then we'd look toward a break of the 98.99 level, our double top that we've seen in trading here this week. So the movement would be, you know, something like this through here, and then look toward the 61.8% retracement, 99.45 level on the top side. That would be our hope for further momentum in the euro versus US dollar. You can see it a little bit more closer if we we scroll in through here, and we would see those see these double tops get above those levels, start to look toward our 61.8% retracement, another 45 pips to the upside ahead of the 99.99 or 98.99 swing highs that we've seen over the last 2 trading days. That's how we would extend the trading range for the euro versus US dollar. What would ruin the picture for the euro versus US dollar? Well, we tried to break below the earlier lows for the day, so we tried to break and have some momentum to the downside here. That would take the price to the 100-hour moving average. That's what we need to see going forward, is a break below our low price and then work toward our 100-hour moving average would be our extension target for the euro versus US dollar. But right now the buyers are trying to make a play to the upside. For the dollar versus yen, if we take a look at this currency pair, we are trying to make a break from a technical perspective in this currency pair. And it's a break that we've tried over the last 2 days, actually, with a break below the 200-hour moving average on this bar and on this bar right here. And as you can see, the market did not find the momentum, the continued momentum to the downside on each of these breaks. In fact, the price moved back above the moving average line and start to reestablish support against the 200-hour moving average, both here and here. So this is the newest break to the downside below the 200-hour moving average. And what we need to see is the price stay below the 148.91 level. If the price can stay below that level, the sellers remain in control, and we have the potential to extend the trading range for the dollar versus yen with the 50% retracement at 147.72 as a next big target on the downside. In between those two levels would be the moves to test the low from right here and the low from right here. Those would be our first 2 targets, get below here and here. Then we look for the 50% retracement. So stay below the 91 level, keeps the sellers more in control, keeps the idea of a break to the downside in that favor. Let's take a look at the dollar versus Canada last as our currency pair to look for a movement. And what we're seeing here is some selling here in the dollar as well, where we where the high price through here tried to extend above the 100 and get to the 200-hour moving average. In trading yesterday, we were able to get just above that level right through here, but as you can see, we failed above that level and then rotated the downside and reestablished resistance against the 100. In trading here today, we moved above it for 2 or 3 hours through here and are now reestablishing resistance on the current hourly bar below that level, as you can see right through here. So the 100-hour moving average is our risk-defining level. We cannot move back above that level. If we move back above the level, then we would look for a break of the 200 to move to the upside. As long as we're staying below that level, we're looking for the low for the day, looking for the 61.8% retracement right through here, and then we look for this target swing area down through here, and we're swing lows and highs coming through this area right here. That if we break below that level, it opened the door for further downside momentum. So there you have a look at 4 major currency pairs, keeping the idea that the ranges are very narrow and that we may have an extension and of the trading range, getting more to the average trading range or working that way. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.